Bank of Asia warns Japan's sell-off risk. One intervention headline and this pair can freefall 150 pips in a heartbeat. The liquidity grab above 162.60 is a scalper's dream and a swing trader's nightmare. They're all buying the breakout. They're all positioned for one more surge past 162.60. And that is exactly why the biggest move today might be a trap that rips their faces off. Look at this number. 162.59. Right now, US dollar to Japanese yen is pressing against the wall, the very level where the ghost of intervention begins to whisper. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Because when the herd is all leaning the same way, the liquidity pool is deep enough for a single headline to trigger a liquidation cascade. And today, that cascade is closer than most think. Here's my session verdict. The trend on every time frame is still a strong buy, monthly, weekly, daily, even the 1-hour chart. But the trend is not your friend when positioning is this stretched. The ADX is at 57, CCI above 140, and short yen bets are at levels that make BofA publish a sell-off risk warning this morning. I'm calling this a bull trap formation until proven otherwise. My bias is to fade the breakout above 162.60 unless we get a clear, high-volume surge. The single invalidation level that flips this entire structure is 161.45. Write this number down. If we break and close below 161.45. On the 4-hour chart today, the bull trend is over, and we are likely to see a fast 150 pip correction towards 160.00 and beyond. The herd is long, stop losses are clustered just below 162.00, and the liquidity grab is going to be violent, one way or the other. Let's walk the chart from the weekly down to the 60-minute, because the architecture reveals exactly where the trap is set. Weekly chart, price is above the MA20, MA60, and MA200. The moving averages are stacked bullishly, with the 20-week at 158.30 and the 200-week at 152.10. MACD is climbing with no sign of divergence yet. This is the steam engine that has powered the yen carry trade for months. But note the RSI at 66 on the weekly, not overbought, giving the pair room to run, which is why the bulls are so confident. Daily chart, the MA20 sits at 161.49, and we are trading well above it. The distance between price and the 20-day moving average is significant, about 110 pips, and that's usually where mean reversion players start sniffing. The daily pivot point is 162.14, and we are at 162.59, right on the first resistance at 162.60. The next resistances are stacked tight, 162.83 and then 163.29. But here's the hidden detail. The daily MACD histogram is still expanding, no bearish divergence. So the pure technical trend is healthy. That's why the trap, if it fires, will be news-driven, not purely technical. Now drop to the 4-hour. The 4-hour MA20 is 161.95, MA60 is 160.42, MA200 is 157.90. Price is miles above all of them. The ADX on this time frame is an extreme 57. That tells you the trend strength is off the charts. But the CCI at 143 screams overextension. When a trend is this strong and yet so stretched, any sharp pullback will be a fast, violent retest of the 4-hour MA20 near 161.95, which aligns almost perfectly with the first support S1 at 161.91. That is your first buying zone if you're a trend follower. But if the momentum breaks, that zone becomes the trapdoor. The 1-hour chart is where the scalpers live. Price is glued to the top Bollinger Band, MA5 at 162.23, MA10 at 161.95, a very tight compression. Williams %R is at minus 10.73, pinned in overbought territory. MACD on the 1-hour is still printing higher bars, no crossover yet. This is the final squeeze before the snap. Here's what most traders miss. The real liquidity pool sits above 162.60, where breakout orders cluster. A false break above 162.60, followed by a swift rejection and a 5-minute close back below 162.60, is the classic stop hunt that triggers a cascade down towards the pivot and the S1 support. I've seen this pattern on yen intervention days before, even if the intervention is just a rumor. The whole structure is a coiled spring. The catalyst that ties this together is right in the headlines. BofA warns of Japan's sell-off risk as short yen positions stretch. The Japan savings export era, decades of capital flowing out of Japan chasing higher yields, is showing signs of beginning to unwind. That's not a small sentence. That's a tectonic shift in the global carry trade. The U.S. Japan yield differential is still wide, favoring US dollar to Japanese yen upside. But the market is so one-sided that any hint of BOJ policy tweak, or a Ministry of Finance verbal warning, can trigger an exodus. Cross-asset linkage. Watch the Nikkei 225 and JGB yields. If the Nikkei starts selling off hard and JGB yields spike, that's the early tremor of a yen repatriation wave. That will send US dollar to Japanese yen into a freefall. And if the dollar index gets hit by a risk-off move, the pair will double drop. My 1 to 2 week directional lean, the path of least resistance is still up, targeting 163.29, but only as long as 161.45 holds. The invalidation event is a weekly close below 161.45, or a sudden BOJ emergency meeting announcement. That would flip me to a short bias immediately. Do you think the dollar breaks 105 this week? Comment yes or no. I'm tracking consensus. Because dollar direction is the tide that lifts or sinks this pair, most people skip this section. That's exactly where the money is made. Keep watching. I'm going to hand you 2 scalping strategies and 1 swing trade, each with exact trigger numbers and stops. But before I do, I want you to understand the rhythm. In a stretch trend with intervention risk, scalping the extremes and swinging the mean reversion are the only high probability plays. Strategy 1, the opening scalp, scalping, high probability. This is the fast snipe right at the London and New York overlap. The trigger, price taps 162.60, the daily R1, and on the 5-minute chart prints a bearish engulfing candle that closes below 162.55. That's your rejection signal. You go short at the close of that 5-minute candle. Exact entry around 162.53. Stop loss goes at 162.71, just above the wick of the rejection candle and above the R1, giving you an 18 pip risk. Take profit 1 is set at 162.25. That's a quick scalp back to the MA510 zone, giving you a 1 minute and 1.5 seconds risk reward. If momentum accelerates, take profit 2 sits at 161.95, capturing the liquidity gap down to the 4-hour MA20. Void this scalp entirely if the 5-minute candle closes above 162.65 with volume. That's a breakout, not a rejection. The opening SCLP entry, 162.53, 5M bearish engulfing close below 162.55, stop loss, 162.71 take profit 1, 162.25 take profit 2, 161.95 risk, ear reward, 1 minute and 1.5 seconds 1:3.2 are invalidation. Void if 5M candle closes above 162.65. Strategy 2, the liquidity grab, scalping, counter noise. This one exploits the stop hunt above the obvious resistance. The liquidity pool is resting just above 162.60, where breakout buy stops are lined up. Here's how I play it. Price pushes above 162.60, spikes to 162.73 to 162.80, and then within 2 5-minute candles it reverses and closes back below 162.60. That is the false breakout confirmation. Enter short at 162.58 on the closure of the second 5-minute candle below 162.60. Stop loss goes at 162.85, above the new high, protecting against a genuine continuation. Target is a single. Fast profit at 162.20, which is just above the 1-hour MA20 and near the central pivot. That's a 65 pip target for a 27 pip risk. roughly 1 minute and 2.4 seconds. This scalp requires fast execution. If the pair doesn't snap back within 15 minutes, cut it manually. The grab fails if the 15-minute candle closes above 162.80 with sustained buying the liquidity grab entry, 162.58, after false break, 5M close below 162.60, stop loss, 162.85 take profit 1, 162.20 risk, reward, 1:2.4 are invalidation. Void if 15M close above 162.80. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing, trend alignment. Now, the swing trade that catches the unwind if the intervention ghost materializes. This is a counter-trend mean reversion play, aligned with the stretched positioning. The trigger, a 4-hour candle close below 161.90. That's below the first support S1 and just under the 4-hour MA20. That break confirms a short-term top. Entry on the next 1-hour candle open, expected around 161.88. Stop loss goes at 162.70, above the session high, placing it outside the daily range structure. Take profit 1 is the S2 support at 161.45, a conservative 43 pip gain. Take profit 2 is a stretch target at 160.80, near the MA60 on the 4-hour and a major liquidity pull from prior consolidation. That's a 1 minute and 3.2 seconds risk reward if both targets are hit. Use a trailing stop once price reaches 161.45. Move the stop to entry to make it risk-free, then trail by 30 pips. The explicit invalidation level that kills this swing is a daily close back above 162.83, R2. If that happens, the bull trend resumes and we are targeting 163.50 on-screen trading plan graphic. The session SRNG entry, 161.88, after 4 hours close below 161.90, stop loss, 162.70 take profit 1, 161.45 take profit 2, 160.80 risk, reward, 1:3.2 are invalidation. Void if daily close above 162.83. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. I cap my scalp risk at 0.5%. No positions through high-impact news like US PPI or unexpected BOJ announcements. Stops are non-negotiable. The yen can spike 100 pips in a single second. This is how you survive to trade the next big move. The single most critical level for the next session is 162.60. If price closes above it with conviction, the bulls have won the week. But if we reject it and break 161.45, the intervention ghost becomes real, and a 200 pip correction is on the table. Tomorrow, watch the Tokyo Open and any verbal jawboning from Japanese officials. One comment can flip the monthly trend. If this level breaks, the whole monthly trend flips. I'll have the updated blueprint 24 hours from now. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.